Hi, everyone, and thank you for joining today's discussion and webinar on SMB banking, digital disruption, and innovation. Today's moderators are Mercator Advisor Group's own Director of Credit Advisory Services, Brian Riley. We're joined today by Galileo Financial Technologies Head of Strategic Expansion, Scott Johnson. In a moment, we'll get started. Just going to give at least a minute for folks to, because folks are still joining. I thought I'd start by just doing a few sort of house cleaning items here. I want to remind all of the attendees that today's webinar is being recorded. So a recorded version of today's webinar will be available for you to consume again at a later date or reference or share, anything like that. We will also make the slide deck and any data points that we shared today available. If you're interested in getting to that slide deck and this data before the webinar recording is available, feel free to email us. You can email info@mercatoradvisorgroup.com or info@paymentsjournal.com. Lastly, we have the ability to field questions, and we're going to close out our webinar with a Q&A session. Questions can be asked at any time. So as our discussion progresses, please feel free to jot a question down and send it in, and we'll do our best to get to you. We even have the ability to drop you a line following the event. If we don't get to your question, we can still do a quick follow-up. So for better or worse, even if you feel like there's not enough time or whatever, please feel free to send us the question, and we will do our best to respond in due time. Without much further ado, if I could throw in sort of two pennies of my own thoughts, having seen some of our discussion come together, I think the most interesting thing that was on my radar was how, though we're in a discussion around SMB banking and what would be SMB payments, how frequently it seemed like those trends seem to follow consumer payment trends. So that on maybe like a spectrum of enterprise and large corporate payments versus individual and consumer payments, it seemed to me like the SMBs and these business owners seemed a lot like consumers. And so as we have our discussion today, what sort of might come to the fore is that this is a discussion around mobile and omni-channel, and a lot of the consumer trends show right back up in the SMB world. And I thought that was so fascinating. I wanted to share to get us started. Without further ado, I'd like to introduce Mercator Advisor Group's Director of Credit Advisory Services, Brian Riley. Brian, if you don't mind kicking us off with sort of like an overview of the space and the things that you're tracking, and some of the context we want to begin with to open up a discussion around SMB banking disruption and innovation.
Well, thanks, Ryan. The payments world is really innovative, and it's been innovative since day one. But a lot of the plumbing and a lot of the infrastructure that's been used has been around 40 years. And boy, has the world changed. And we've gone from mag stripes to chips and everywhere in between. And now as mobile devices come into fray, there's certainly a high push to get things into the digital world, not just face-to-face transactions. And one of the things that's really important here is how nimble you can be with your business, whether you're doing bank acceptance for consumers or businesses, or whether you're a business that's looking to bring embedded payments into the process. And embedded payments are somewhat of an elusive word, and you probably already experienced them without even knowing it, whether you're hailing a car or arranging a car service, anything in the gig economy, or even I notice these days when I go to a physician's office, how smooth that works and how things are integrated into their process. So it's really important to look at the trends that are surrounding there and the technologies that develop. And that's one of the reasons we were excited with this relationship with this relationship, to be able to look at what's going on in the world with the latest technologies in the field. And with that, I'll pass over to Scott Johnson for a moment.
Well, thanks, Brian and Ryan. Again, I really appreciate you having me on today. Super excited to talk about the small business space and small business banking and payments and some of the things that we're seeing. One of the things to start off with here, and you can see on this first slide, when it says for only 18% of small businesses really are happy, they really agree that banks are providing everything that they need. Well, you look at that and you think about the numbers associated with that. We estimate about 32 to 33 million small businesses in the United States. So if you think about that, that's 26, 27 million small businesses that are not fully satisfied with the small business offering that they have today. And when you think about that number, you think, well, how did we get here? How is that possible? Because I think small businesses are really looking for a couple of key things to operate their businesses. One, they want to be able to manage their cash flows. They also want to be able to, make business decisions, their day-to-day business decisions, based upon their entire health. And they also really are looking for when they need that lending component or a credit component to help them build their businesses. So how is it possible that here we're in 2022 and really 82%, if you look at again the other side of that number, 82% of small businesses are not necessarily happy with the financial service product that they have today. And I think a lot of that goes back to some of the challenges associated with what Ryan and Brian, you were touching on right at the beginning. Some of this goes back to just challenges within the kind of the broader I'll call it technology stacks, or how you think about these products have evolved. So typically, as you think about banks, they're running on older core systems, and they've had to build products and services associated with core banking systems that were not necessarily designed or ever built to support the types of use cases that we're seeing in 2022. And so they've been focused, a lot of banks have been focused on the core system and building products around that. And that's where I think we're challenged, where now what we're seeing is turning that model totally upside down and trying to focus on the customer first, and then building down into the broader technology stack. So I think one of the reasons why we're just seeing this high number is because, again, the core systems or the technology stacks have not been able to support all of this, as well as again, with a lot of our bank partners today, and for any bankers on today, a lot of things are siloed at the bank. It's not that's how it was designed per se to begin with, but typically the payment side of the house is going to be very different than maybe the bank side of the house. They might even be running on disparate systems that then tie in ultimately into the banking core. So I think that you've got a lot of those areas that cause some of this challenge, and ultimately who feels that pain are small businesses, because they have a very disjointed or fragmented product offering as they're trying to solve their financial needs. And what we're seeing, I think Ryan mentioned this, is how similar it is for what we've seen in the neo-challenger banking space with consumers, how small businesses want that same type of experience. They want a really strong user experience, a UI or UX experience. They want to really kind of follow what we've seen with how the consumer neo-challenger space is kind of let out in some of that ease of use in some of those areas. You can see here on this slide some of the things that are really, really important for as you look at offering these types of products. You can look at making things easier, right? We're going to talk about that a lot today. It's just all of us live our lives on our mobile device, and how we're trying to make that easier. Well, you can see again some of the stats here, and being able to have rewards and discounts layered in. But what I find fascinating about some of the data on this slide is you look at how many consumers and small businesses, as you think about this, want access to new products or services, and they want to get that from one provider. So instead of getting this from multiple different providers, they're looking to get this from one single provider. Now, I think the other area where you've seen a lot of this kind of blending, or between consumers and maybe small businesses, you've seen the rapid growth in buy now, pay later, right? You can't check out if I'm on Nike.com and I want to buy a new pair of running shoes, I'm for sure going to get an offer for a buy now, pay later product at that point. But think about the rapid growth and what we've seen in the consumer space. Well, an area that we really feel that is underserved right now is tying that into small businesses, because with small businesses, they need the same thing. They need access to credit when they need it. And so we've certainly seen, growth in the consumer side on the buy now, pay later space, but we're absolutely, starting to see that growth more in the small business space, and believe that that's another area where we're going to continue to see, higher growth, kind of across the products and across the spectrum.
Scott, I wanted to roll back to a couple of things you said. And the first was about the older systems and the technologies and the emergence of buy now, pay here lending. And boy, that was a message I think a lot of bankers got, right? Because you saw this instant growth with buy now, pay later. And ironically, it's something that has always existed within a payment card, right? All you had to do is make 4 payments over 6 weeks, and you would do the same thing that a buy now, pay here later model did. But being able to package that and find a consumer need, and there was an inherent shift within that. Before buy now, pay later, we were enabling cards to be used by consumers at merchants. And this flipped the whole power structure to now it's a merchant that offers a financing option for the consumers. And again, that was not new and it wasn't rocket science. The companies like Household Finance were doing it decades ago. And here we have something that's new and shiny, and it's got great take-up. Now, what you saw, though, was that the legacy systems that are out there were not ready to cede the space to the fintechs. So they either bought their way into the business or they started to cobble their own versions of it. And that took 8 months to a year. So they no longer had the opportunity to be leading players in this. The other piece you said that was really interesting is about the silos. And I think of the days when I was at Citi a couple of decades ago, and it was easier to get information from a credit bureau about what other relationships the customer had than to be able to look at one internal system that passed through all those silos. And that becomes really myopic when you start trying to lend, because you need to be able to understand the depth of your relationship with the customer and really the breadth of services that they're offered so you could maximize that revenue. Mm-hmm. And then when you push into small businesses, well, small business people are also consumers. So they have that connection to this process, but they also have an entity that they provide for their lives and their family with. And that becomes really the most important part of their life, the small business that they build through their banking process.
Brian, it's interesting because I when you talk about the buy now, pay later space, I've told this story to a few people. When I was a kid, my mom took me down to the local retail store to buy a new winter coat. I live here in Salt Lake City, Utah, where it snows a lot. And I remember going in and she was like, what we're gonna do is we're gonna put this on layaway. I was like, well, what's layaway? Oh, well, we pay for this over the next kind of 6 to 12 months in installments. And so it's so interesting to see this is not a new concept, but I think it ties into exactly what you're saying, that here's an area where because of some of these siloed systems, areas within kind of the traditional banks, you've seen kind of this rise in the fintechs in this buy now, pay later space, because they have the technology, they've got the tech stack to be able to support this. And you've seen a shift now, right? I mean, to see how many merchants now are offering buy now, pay later. And I think it's clear that, again, we need to be focused on being able to support, small businesses when they need, access to these types of kind of new services. Again, we'll talk about this more and more today about in a consolidated fashion. So it's not just a siloed offering here and a siloed offering there, but that you can really look at this holistically.
Very cool. So I love the contrast between sort of traditional banking and how there's traditional payments. And then clearly what I'm hearing is that there's a gap between the two, and that we're discussing sort of how new entrants have positioned themselves between traditional banking and traditional payments. Scott, a question for you, sort of like, how are the different ways that that new entrants have exploited that gap? We touched on buy now, pay later. Are there others that you guys are focused on?
Yeah, absolutely. And we're starting to see kind of this gap being filled right now. And we have seen this over the last, kind of couple of years as you look at this, where there are products and offerings that are starting to bridge that gap. And really the way that we see this being done the best, and you'll see this a lot in some of this data here that we're going to talk about, which is, small businesses want to get, their services in one location, right? A small business owner, whether they've got 3 or 4 employees or 160 or 170 employees, is a very, very busy business, just like we are, in our businesses and in our own personal lives as consumers. They want to get these services in one location. So that, I think, is the area where we're starting to see this gap being bridged. Instead of getting, a lending product over here, and then I've got my banking over here that is, potentially disparate from my lending, and maybe I'm doing payments over here. What we're starting to see now is blending this together and coming together in a few different use cases. Because again, what we've seen is, because a lot of these new fintech, companies that didn't have or don't have the legacy tech debt, and that can start building their services with the end customer or end small business in mind, they're able to kind of bridge these gaps. A few examples of those, and we'll, that I wanted to touch on that are partners of ours today. A great example of a company is Bluevine. Bluevine has done an amazing job, I think, going out and kind of blending these areas together. They're able to do real-time decisioning on lending for small businesses, and they've blended that now into a great, small business use case where with Bluevine, they're able to come out and say, yes, now I'm also going to offer a card product associated with all of this. So they're able to really consolidate and bridge the, kind of that gap that you'll see out there with what they're doing. A couple other ones that you can see here: Global Rewards, great company that's focused on B2B payments. Well, they've really bridged a lot of these gaps as well, in being able to support these kind of consolidated use cases and being able to offer out, all of these products and services within kind of one use case or experience. Bluevine, Blue Penguin does the same thing in the commercial space. And we see even somebody like Shipt in the gig economy space does a great job enabling, for grocery pickups and is doing all of these types of things directly into one type of mobile, kind of experience or across one product offering. Now, what I find that's so interesting, if you go back to the slide before as well, really quick, and you look at kind of some of the data on this, on the 41 and 47% there. So if you look at the 41%, here's what's so interesting about this data is where small businesses are interested in getting these services from. They are not traditionally saying that you have to get this from a bank. So I think what's happening now, again, if you look at this, banks are getting squozen, right? You've got legacy core systems on one side over here. You've got fintechs on the other side. And it's one of the reasons why SoFi, Galileo's parent company, has recently acquired a modern core platform with Technisys. Technisys specializes in updating or modernizing core systems. And so with Technisys, now you've got a modern core with Galileo being a modern payments platform, and it's really something that we have found to be incredibly valuable. Even in the last kind of 7-8 weeks since this acquisition has closed, the number of synergies and opportunities that we're seeing is really pretty amazing. And that's why I think that banks are not necessarily going to get left out of this, as long as I think that they're willing to, again, to modernize their platforms, their cores, to make their lives easier, to be able to not run on so many different, antiquated systems or disparate systems, but then being able to offer, a better consolidated product because they've got the right technology stack.
That makes sense. It's not an us or them situation. It's a matter of using the technology to address the market in a more efficient manner.
Yeah, it absolutely is. And I think that being able to address things efficiently is so key there, because as you look at that, again, that's the other reason why I think that we're seeing this gap being bridged, is there's an efficient way to now be able to offer lending and payments and banking all within one consolidated experience, with the data, being available and doing all of this in real time. That's the other kind of key here that I think that we see as well, is the efficiency, in an organization that can do these types of things in real time.
Scott, I had a question just a little off the cuff. We're talking about the division between banks and traditional payments, and then the new entrants who are filling the gap. Are traditional banks going to be left behind, or is it a situation where they can fill the gap as well?
I do think they can fill the gap. I really think that again, banks have an incredible advantage here. They have a long history with their customers. They can absolutely have the ability to offer, these consolidated products. I think the key with banks being able to kind of bridge this gap, and they absolutely can, and a lot of them have done that. But what's interesting is I was out visiting, a bank prospect who shall remain nameless a few weeks ago, and they were talking about the amount of time that it took for them to open up a small business account, and it was almost staggering. It was really closer to 2 to 3 days, not 2 to 3 seconds. And so you look at this and you say, yes, I think that banks have an incredible opportunity here. You go back and think even about that first slide. Again, I'll say it again, 82% of small businesses are not happy. So there's that amazing opportunity, I think, within, banks and within fintechs to solve this problem and be able to offer better services, as long, again, as I think, again, with the banks out there, if they're able to modernize their cores and able to kind of blend across all of these product offerings and look at this more holistically in real time, that's where the real opportunity is.
So I'm a little curious, like, okay, we mentioned some partners that are in action, but I'd like to get a feel for, like, where else are we seeing some of these gap bridging solutions, in the wild? Do we want to focus on embedded finance and that particular one, or if there are others?
Yeah, so I think it's a great one. If you look at some of the stats and you look at the slide that's got the, it's got 41% and 47%. Let's jump down to that one really quick, because I think that's a great place to kind of start, Ryan, as you look at this. If you go to that one, yeah, this is a great one. Embedded finance. This one is real interesting because, we talked a little bit when Brian mentioned embedded finance, at the beginning of the call. Well, I'd like to go back and look at the history. Why is embedded finance growing so quickly? And I look at that and I say and if you go back and look, so much of that is related to the mobile device, right? So you look at this and you say, 15 years ago, there were not all these various options for how to get, access to financial services. It just didn't exist. It was your bank or credit union, and that was it. Well, what's happened is, we know with the rapid growth, as we all know, of these mobile devices in our hands all day, every day, that's where embedded finance has grown so rapidly. And as you look at this, you can see here, 41% of small businesses are interested in using digital banking from other service providers that are not necessarily their bank or financial institution. I mean, it's staggering when you think about that. And then you look at this other stat here, that 47% of those are willing to do it at a premium. So it goes back to just reinstate how kind of underserved or unserved this small business segment is. If 47% of them are willing to pay more just to get the right financial service experience. And so I think that's where, as you look at this, there's a couple of examples of partners that we've seen that have done an incredible job in managing embedded finance, across their offering. I think one of those, I'll just share one quick use case. If anyone's familiar with the company, with Toast. Toast does an incredible job managing point of sale hardware systems, right? They specialize in restaurants. Well, what they've done is an amazing job of not only providing an incredible experience for the restaurant owner to be able to manage everything they need to at the restaurant, but they're able to now integrate payments wholly into that experience. So now what they're able to do is they're able to they are so close to their customer that they could even offer a lending product, as example, to a restaurant owner, because they're seeing how many sandwiches were sold at ABC restaurant yesterday. They're so tightly aligned with their small business customer that's why now they've embedded everything within kind of their platform and their product offering. And that's where we're seeing these types of really cool embedded finance solutions start to really grow, because again, these solutions are so tied in and we don't even think about it, right? It's the same thing with Uber. When you take an Uber, you don't think about the payment per se, it's already done. All of these things have just been incorporated into our lives. And that's why I think it's so exciting to see how embedded finance is growing and how you will continue to see embedded finance service the small business industry.
And there's a whole continuum here, right? So if you have lending needs within that small business, you have savings needs and revenue needs and asset protection within that. And then there's also the needs to run their business, which is where embedded finance comes into the picture. So in your Uber example that you use, there's an elegance to how the transaction goes through. It's seamless. It happens before, you can see it settle on the back end with your card when you see that the transaction's been paid before you got into the car. But through the whole infrastructure and the ecosystem, it's important that the company's lending needs be met and the comprehensive view on what do you do with the cash when you get it.
Yeah, and I think that's where, and I think you're spot on, Brian. I mean, that's why it's so important. I think, our thesis here is to look at this holistically, right? There's great, solutions out there that are very kind of narrow focused, right? Where it's like, I'm going to do one part of this offering really, really well. But what's been so amazing about some of these embedded finance, companies and products is it's seamless. And, as far as from a user, it's frictionless from a user perspective. But they're also so tightly aligned. Again, coming back to like this Toast use case, they know exactly, everything that's going on with the partners that they service. And there's lots of examples like that again are looking at a holistic payment solution to be able to better service their customers, and ultimately it drives better adoption. I think that's why as you look at this again, there are small businesses that are just begging for this consolidated experience. And again, I think a key here is they're willing to even pay for it. And that's the thing too, that this isn't something that has to just be given away, that you can see small businesses that are willing to pay for having a better consolidated service across their platforms.
Brian, I think we lost your audio for a sec. Do you want to recapture that for a moment? Otherwise,
Sure. I was just going to mention, in addition to what Scott said, there's more than 10 million of these small businesses to address in the U.S. market.
Yeah, it's and again, it's what the market numbers that we have. It's pretty amazing that we think that there's anywhere from 26 to 27 to 28 million small businesses that are not overly happy today with what they're getting. And that's why I think this slide here, why embedded finance, why is this going to continue to grow? Well, I think it's pretty clear. I mean, you can look at that to see you've got 43 billion in 2021 up to 138 billion. Well, what's going to drive that? It's being driven, by exactly what we've been talking about. The need is out, there's a gap in the marketplace that these companies are starting to fill. And because the behavior is changing so much on it, that we see on how small businesses eat, sleep, and drink and manage their day-to-day activity. They don't have to go to their bank for all of these financial services. Now we know that you have to have a bank to offer financial service products. But if they're looking at this and they're saying, well, hey, I can get this from my digital provider or my mobile provider, I can get a product offering from my point of sale hardware provider, or from an online lender that offers all of this. That's why this is going to grow so much. So I think that this embedded finance space is so exciting that you can see, because this is being driven by the technology, the consolidation of the product offerings, and having all of this, as we know, available on your mobile device. Right? It's so frictionless, so seamless to be able to offer these types of products. And that's why we think that this number is spot on here with the growth that we're going to continue to see in the embedded finance marketplace.
And it's just not the volume, it's also being able to create efficiencies in the process, right? So were you to do engineering of your process and try to push it down debit lines, as an example, there's a true savings in interchange that would go otherwise on the credit rails. But being able to drive that, you have the benefits of the efficiencies, the mass that's growing, being able to engineer how you want this to play also becomes a major reason for considering embedded finance.
Yeah, absolutely. And I think it's a time savings as well, Brian. You're spot on with the cost savings. And you think about, again, just the time saving. And think of just how you live your own life, right? There's a reason why I don't take a cab, I take an Uber. I don't want to think about the payment. Right? I'm like, it's easy. I've landed in an airport. I'm walking out. I can do those things. Right? I mean, it's just this time savings as well. So you've got incredible efficiencies. Now, you've also got this ability for the small business owner who is incredibly busy and is able to now save the time associated with having these types of embedded finance products. So I think, again, this is where there's incredible opportunity, and there's opportunities for banks to play, I think, within the space. I don't think that by any means that we're saying that banks are shut out from embedded finance. I think that that's one of the things that certainly banks can play in this space. They start to modernize their cores, and they can get tighter and tighter to their customers and being able to offer out these types of services and real-time solutions. I think that there's a real opportunity there as well.
Yeah, I agree with you on the banks. It's not an attempt to isolate the banks. In fact, it creates opportunities for banks to fill the needs that come here. And it's not just waiting for fintechs have certainly a play in this market, but for established financial institutions, it's really a call to action to see where you want to fit in on the whole transaction process.
Yeah, exactly.
Scott, I had a question, again, a little off the cuff, but you know, I'm a Boston guy. Toast, for instance, is a Boston company. But I was just sort of curious, like in a broader context, are there specific geographies that you feel are maybe like, I don't know, like more greenfield or more prone to disruption, or the disruption hasn't reached yet?
Yeah, I'm really glad that you asked. Yeah, you're a Boston guy. I'm a Salt Lake City skiing guy. So yeah, I mean, there's some of these where you're like, there's some areas where we're seeing, rapid kind of fintech growth. But I'll tell you what's real interesting as we look at this. There's a couple of geographies where we're seeing, tremendous growth. One of those in particular is in Latin and South America. We've spent over the last number of years, really expanding our platform and our product offering. Technisys, as an example, is based in Buenos Aires, Argentina. So they've been servicing a large number of customers in the Latin and South America in geographies. We see this as an area ripe for innovation, ripe for disruption, is in Latin and South America. What's amazing, I'll just throw out, a couple of quick stats. We do a lot of processing in Mexico. We've certified, to MasterCard's local domestic switch in some of the areas in Mexico. What's amazing is in Mexico still, 85% or so of transactions are still done in cash. And that, I'm going to say it again, 85% of transactions done in cash. Imagine now if you're a small business in Mexico or other countries in Latin and South America that have a similar type of cash usage. Imagine the amount of time, effort, and energy that you're expending on a day-to-day basis to manage cash, whether you've got 5 or 6 employees or you've got 200 employees, the amount of time that is being spent in managing and dealing, and the limited amount of reconciliation that's going to be available for a cash product. So that's an area where we're starting to see incredible growth in all sorts of different use cases that we've talked about, again, in the small business marketplace, are in those countries. We're starting to see, really creative, offerings in lending, business banking, consolidating those services together in those regions and those countries. And what we're finding is, again, all of this is being driven so much, again, by the mobile device. Because if you think about this is why this has changed so much, right? 10 years ago, you weren't able to offer these types of services, or 8 years ago. Now, if I live in Mexico or wherever I might live, I can get a $50 Android phone, and now I can have access to mobile banking. It drastically changes the entire kind of calculus around how financial service products are managed in those areas, because now with my phone, I can access these types of services where I might never have had before. And even if I walked into a bank branch in some of these countries, I might have not been welcomed or serviced. Well, now as a small business owner, I've got the right way to now be able to manage my business, because I can get access, to these types of products using my mobile device. And now I can start managing my business more efficiently. And it goes back to what Brian was saying. I'm taking cost out of my process of managing everything. I can do this quickly because I don't have to spend so much time. And now I can take all of that effort and energy and focus it on what I really need to do, which is growing my business. And that's why we're so excited, I think, about Latin America and South America and the growth opportunities in those geographies.
LAC is exciting because of that cold cash issue. And when you think about it, the cash is limiting unto itself. You can't do cash payments for electronic commerce. right? You're limited on that focus. Another reason that is the conversion to electronification is important is that there's missed tax opportunities for local governments, right? You miss where's that money coming from? How's it being spent? How do I monetize sales tax? And so there's support. We talked the other day about Cody in Mexico as an example, where the Mexican government is strongly behind the delivery of cell phones and electronic access to payments. And we're not, you don't need a $1,200 iPhone to do that. You could do it with a $45 Android phone anywhere in the world. And that even changes the playing field on payment acceptance. Rather than being tethered to a line that might rely on a T1 access line for access, you're doing it through the cloud with your mobile payment. So there's that whole push fits into this whole ecosystem very well, I believe. And it's not just Latin America. There's other parts of the world with similar high cash usage and based on cash economies.
Yeah, you're right, Brian. I mean, we've seen, I'm glad you touched on kind of even on the acceptance side. One of the questions people will ask is like, well, but there's not a lot of merchants that accept, cards. What is interesting is because again of the same thing of what we're seeing in technology, you've got an amazing amount of merchants now, or again, small businesses that are accepting electronic payments because they can use, in Mexico, you've got Clip and some of the players down there that are enabling these types of payment programs to where they can, allow merchants or small businesses to accept, debit and credit card transactions. And again, this is because, like you said, the $45 or $50 Android phone is now available. And again, that price point, you don't have to go spend $1,200 on a brand new iPhone 12 or whatever it is. You can do this on some very affordable devices. And now you've got the ability to really grow as we see, kind of the broader offering of small businesses in these areas. And that's again why we're so excited about this space, why Galileo has invested so heavily, in certifying our platform in these countries, again, with our partnership or the acquisition of SoFi by Technisys, why we believe having modern banking cores in these areas as well is so critical for us going forward, because we see such an opportunity for growth with small businesses in these regions and geographies.
Very cool. So we covered sort of greenfield opportunities on a global scale, but I want to make sure that we didn't, sort of overlook, back here in North America and just different types of growth opportunities. Small businesses come in all sizes. I've got family members who run what you might call like a micro business, but naturally their needs are drastically different from small businesses that are a chain or a growing chain or whatever that might look like. Scott, I just want to make sure we hammer out for sure on our discussion today, like as businesses change in scale and scope, sort of what needs to change with them, and how do you see that happening?
Yeah, you're spot on with how businesses grow, over time, and we think of small business, anyone from could be a sole proprietor, or someone that has 2 or 3 or 4 employees up to a couple of hundred. And I think that what we're seeing, is just the speed at which things are changing. So how do you think about managing, multiple different types of sizes of companies and within small business? And I think it comes down to probably a few key areas. Number one, I think at the beginning, we're talking about the right technology stack. Well, that's incredibly important, as well as being able to really look at having the right platform. We're big believers on open APIs. We published our APIs years ago, and we really believe that that's one of the key areas, or one of, again, the key areas of focus of our business, is to enable our partners and our small business customers to be able to iterate and be able to be innovative with our platform through the use of our open APIs. Now, the other thing that we believe that is so important is having the right level of partnerships as well associated with this. Listen, we don't have the corner on all the great ideas and all the great product offerings out there in the marketplace. We've got some good ones, but we're not perfect, right? We rely so heavily on our partners, right? And so that's the other key thing here is making sure that we've got the right partners to fill some of these gaps that we might have, that can then make this, again, that seamless approach to offering these products for small businesses. And looking at it, I think what's so important as well, Ryan, going back to your question, is how you think about this. You've got, again, these different offerings here that you can see, but thinking about this as well in terms of improving kind of two maybe key areas. One is making sure, again, as you're trying to adapt and as small businesses change in size and growth and scale, how do you have an effective, real-time onboarding process? Again, I mentioned earlier, one of our prospects we were talking to said it takes 2 to 3 days to open up a business banking account. Well, you compare that to some of these players here that we talked about earlier. They might be opening up accounts in 2 to 3 seconds and doing all of the KYB and everything associated with that. They've built some pretty incredible logic on that. So I think having the ability to adapt to having a really, really strong account opening that's as frictionless as possible in the small business space is key to this use case. I also think then the other key area to focus on is you think about how to adapt and grow with these various sizes of small businesses, is really looking at how do you then manage them ongoing, right? Because what was really sexy 3 or 4 years ago, well, it's okay now, but what are some of the newer things? We talked a little bit about buy now, pay later. Again, 5 years ago, people weren't really doing a lot of that. And so there's things that come and change. And I think that's the key to this is, again, having the right technology stack, taking an open API approach to this. So when the next great feature comes along or the next change comes along that you need to adapt to, that you're able to respond to it quickly without a massive rebuild or a massive re-engineering effort. That's how we've been able to see people that can kind of flex, if that's the right word, kind of across being able to service someone that has a need of 2 to 3 employees up to a couple hundred employees, because having that account life management is what everybody really wants, right? If you're onboarding someone that's got 2 or 3 employees, don't you want to help them grow to 2 to 300? Isn't that the whole goal of what we're trying to do? And I think that's why it's so important to have that ability within your tech stack to be able to kind of flex and move between areas of a small to kind of a larger opportunity that's got a couple hundred employees.
So awesome. We've got some questions coming in here. I don't want to preempt the gradual conclusion of our discussion. Scott or Brian, did you have last points that we felt like maybe deserved a little bit more attention? Otherwise, we've got some questions coming in. Oh, and by the by, audience members, please feel free to submit questions throughout our discussion, though. We're going to be shifting over to Q&A soon. Let me just quickly pose to Scott and Brian, were there any other topics that we feel deserved a little bit more attention that we want to make sure are mentioned before shifting?
One that I might take just a second on that I was remiss in not bringing up is something kind of on everyone's head top of mind is certainly around COVID and what has happened kind of with small businesses in that use case. This has been really interesting because we get that question a lot about what changed in the marketplace, or what did you guys see? And I think it goes back to kind of a couple of the key points that we were looking at quickly. One of those in particular is how much we saw the change in digital, real time, et cetera. So I think one of the things that was important pre-COVID, but it's just now become table stakes. The ability to do offer these types of products fully in a digital environment, fully in real time, and being able to offer all the aspects of digital first. So if somebody loses a card, being able to push provision that card directly to an Apple Pay, Google Pay, or Samsung Pay wallet so that they can get that within a few seconds, not 5 or 6 or 7 days. These types of things are certainly what we saw during the pandemic in particular, becoming even that much more important. The only other thing that I'll mention, probably the only good thing coming out of COVID, was the increase in contactless payments. So again, one of the things that was so interesting is to see just the rapid growth in contactless payments, and that number has continued to stay, even as as we're seeing some of the COVID numbers come down. That it's just fascinating to see how important contactless payments are. So again, as I think about the various people listening in today and thinking about this, I would challenge you to look at your product offering today and look at, just say, listen, am I offering a contactless product? Because if I don't offer the ability to do, a true kind of tap to pay transaction today, I think that that's one of the things that where we've seen the players that are offering that, we're seeing longer retention of those customers. We're seeing an increase in those tap to pay transactions that again get, credit or signature interchange rates. And it's really been something that, again, to no surprise, that we're seeing an increase in the usage of contactless transactions on our system.
Awesome. So yeah, we can never avoid discussing COVID. So I'm glad we got that one. I've got some questions from the audience here. Scott, are you game if I lob them your way?
Let's lob them my way. I'll see if we can hit the pitch here.
Okay. Amid increased attention on serving the SMB segment, how should financial services providers differentiate themselves from the competition? Is the key to offer the widest range of services as possible, or do a relatively narrow scope of things very well? So this is is it best to be broad and wide, or narrow and deep kind of question surrounding financial services providers and differentiation?
Yeah, for sure. I think it's a really good question. Let me start maybe on the narrow side of things, just to start with. One of the things that you'll see is some incredibly innovative and really detailed kind of offerings that might have a more narrow focus. And I think that there's definitely a market for those players that have been successful in some of these kind of narrow focused use cases. I think the challenge is if you go too narrow, right, is one, you look at the very specific offering that you have. We've talked a lot about doing kind of the consolidated approach. So if all I'm doing is one use case, if all I'm doing is lending only, well, one, that's a narrow use case. There also are some downsides to, if you're only doing that, you really get kind of cornered, or where people are like, yeah, that's all that they do. And I think the challenge there is it kind of goes against what we're seeing as the broader trend of where we're really seeing the bigger growth is in these use cases that have broadened out. Now, having said that, you can't be all things to all people, right? So if you go too broad and you're not good at anything, well, then you're creating a different set of problems. So I think that what I would look at is you look at kind of, do you go super narrow, or do you kind of try to take this broader approach? I think what's important there is making sure that as you look at this, you do have a couple of key things. Your experience has got to be frictionless and very easy for the small business to use. I do think you want to be a little bit more wide than narrow, so to be able to offer kind of additional products and services. And it doesn't mean that you have to be, again, all things to all people day one, but I think you need to have this vision or view of how you grow your product over time to be able to solve these challenges that we've talked about today. Because remember, as we said right from the beginning, small businesses want to solve their financial services problems typically with one partner or one provider. They don't necessarily want to have 5 or 6 different apps to have very, very narrow use cases. So I do think that I would lean a little bit towards having kind of a broader view of the product offering.
And there's some things you need to get right the first time as you interface, right? You need a way to onboard customers, whether they're consumers or businesses, quickly, efficiently, securely, and quickly, right? You want to be able to get them in the door so there's no resistance later on. You've got to be able to maintain their relationship with appropriate systems access and customer contacts, and then be able to maximize your revenue from that relationship by, whether it's a business like General Motors or it's a flower shop on Main Street, being able to fit those particular needs of the business.
Yeah, I think you're right, Brian. And looking at this lifetime value of a customer, just as you were talking about, I mean, we talked a little bit about this earlier about the ability to think about managing through the life cycle. And I think this gets back to kind of that narrow versus broad service offering. That it's so important to say, listen, I've got I've got the right kind of roadmap. I don't have to be perfect day one, right? But as I look at this, like, how do I want to evolve over the the next few years, or next few generational product offerings to be able to offer this out? And I think that's kind of those are the types of offerings that we see that are being so successful. as well as the ones that have the ability to do this, quickly in real time and have the right technology stacks or platforms to be able to pivot and adjust where they need to as new things come out, because we're seeing, things like that happen all the time.
Nice. Okay, so we're on to another question. This one, it essentially always comes up when talking payments. You must talk security. So let me try to paraphrase the question super quick. For a lot of SMB owners, the big banks, the brand name banks, still sort of instill the most customer confidence. And so the questions around when it comes to data security, how do newer entrants earn that trust and confidence and break the traditional banks sort of, I don't know, maybe quasi-monopoly on being the trusted source of data and security as well as banking?
Yeah, I think of, when you talk about data security, I think it's something that we're absolutely, again, I use the word paranoid about. When you think of what's happened over the last, pick your time frame, 5, 6, 7 years, and the number of data breaches or hacks or whatever you're seeing across so many different vectors of how we live our life, right? Everything from credit bureaus to retailers to, you insert, data breach company name here, and there's a lot of them out there. So I think what's so important is just you look at this, and yes, I do think banks have had a very good kind of track record in looking at being kind of the kind of a higher standard of data security. But what I feel now is we've talked a lot about, kind of embedded finance and some of these different areas where small businesses are really focusing on. I think what you have to do is take a little bit of a step back and say, well, what's the process that I'm using to authenticate myself to get into whatever mobile app or system that I'm getting into? And it might be my bank, but it might be some other, embedded finance product that I have. And there's so many different applications of technology now for user authentication that I think make, me as an end consumer or me as a small business owner or whoever it might be, more comfortable with that experience versus something that might be a little, it might just be basic username, password. You start looking at some of these and saying, I might not be as comfortable with that. But you think of being able to just authenticate through a mobile device or a one-time passcode, those types of things. I think that's the key in being able to look at that, level of data security and being able to really get comfortable with that part of the service offering. And I think one other one that I should probably mention there before I forget is also, I think you're going to see a lot of changes in this area as well. You think of what's going on in the EU and some of those other areas as far as open banking and some of these acts, around, areas of it, it's your data, you can choose who you share that with and where you want to share that. I think what you're going to see over the next, I know this isn't necessarily an open banking forum, but over the next 3 to 4 to 5 years, you're going to see a lot more of that. I think you think of, some of the regulations you see in California, some of the other, states that have enacted various types of regulation around data privacy. You're starting to see that more and more. And I think that that's another area that you have to kind of certainly layer in to what's going on and how you think about this is giving the, the clear ability to, make the small business comfortable from a data security perspective, make sure that it's easy, that you're enabling the right technology fit there, but then also making sure that, again, as you think about these changes that are, I'm convinced will come down 3, 4, 5 years from now around open banking and some of these broader initiatives where, again, ultimately, businesses and consumers will get to pick and choose, who and where they share their data.
Awesome. Sorry, we've got a question that I want to get to, but my screen has slightly cut it off. Forgive me.
Well, one of the things we haven't talked about while you're pulling that up is the best part of our platform here at Galileo is we're located 20 minutes from Alta, Snowbird, Brighton, and Solitude, and half an hour from Deer Valley or Park City. So I've got to put that into this somewhere, as we're pulling up some of these last minute questions.
the security issue you talked about, though, Scott, is really essential when you look at it. And when you think about what's happened in Europe first with the General Data Protection Act, and then starting to migrate into California with California's version, New York has something brewing. There's certainly a lot of sensitivity to that issue. And in many ways, PCI compliance fills part of that void, but it's certainly a hot issue that affects everybody in the back office at the financial institutions.
Yeah, no question. I mean, it's one of those areas that you look at this, and again, data security takes on so many different layers. From we talk a lot about, okay, let's make sure that there's not a data breach, but again, there's so many other aspects to this as you think about it. Areas again from again, I'll even tie this back into what's the right approach in building out mobile apps and types of products and services for small businesses, and doing that in a compliant, data secure way that's also not too overbearing. And that's again one of the challenges that I think that we have. And the companies that have really done that and have done a good job in being again highly data secure, but also having a great user experience, that's kind of where the secret sauce is.
Scott, if I might, thanks everyone for your patience on that on a quick tech glitch. A final question to round out the webinar. How do you prioritize engineering lift to help support SMBs? Everyone seems to be short on eng folks. I think that's engineering folks. How do you decide what gets prioritized in a company serving multiple business segments, as in SMB, enterprise, et cetera?
It's a great question. I mean, this is one area that it's a tough answer. And I don't know that I've ever met a company that has extra engineering resources, right? It's like, oh yeah, sure, we've got a bunch of engineers just lying around. We'll take on any project that we can. I think this is one that, I think the way that we look at it is because, again, we're a technology company. We're faced with the same, decisions that we have to make on prioritizing around engineering resources. I think the way that we look at it, I think it comes back to kind of looking at this holistic approach, right? If you're too narrow, sometimes you're like, yeah, but that one use case is only going to yield this type of return on investment. But I think as you look at this and trying to prioritize this, I think there's a couple of key things. One, again, having the right tech stack makes the engineering effort that much more efficient or easier. So I can't emphasize that one enough. But then also looking at saying, listen, is there the right business case, which I strongly believe there is, and you can put the numbers behind it, where you see the growth that's coming in small business, you look at what's happening, and if you can offer the right product across multiple types of segments, lending, payments, banking, et cetera, I think that's kind of some of the ammunition that's needed to say, this is how we justify getting the engineering resources, because there will always be a lack of engineering resource. That's just how this is. And so I think looking at it that way really helps tell the story to say, this is why we really believe that this is the product where we need to put those key engineering resources on.
It's a great answer.
Awesome. Well, I want to remind everyone in our audience that the video recording of our discussion today will be made available for you. If you'd like to get your hands on our slide deck or any specifics like that, or get in touch with either of our fantastic panelists, drop us a line, info@mercatoradvisorygroup.com or info@paymentsjournal.com. Scott and Brian, thank you so much for your contributions today, and looking forward to seeing what comes next from Galileo Financial Technologies.
Thanks again for having me. It's been a pleasure.
Great, thank you.
Take care, everyone.